Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And I gotta emphasize the unbiased part, guys, because lately bulls and bears has been getting tricked out. They have been getting played. But you know who haven't been getting played? The sheeps. Bah! It doesn't matter for us. Based on the sheep style principle, it doesn't matter if the market goes up. It doesn't matter if it goes down. We just play the setups. We know the levels, know the setups. We just trade it unbiasedly, level to level style. Okay, now we're looking at the daily chart. We see we got this chop candle. All right, despite a breakout of this chop range I had, we broke above 412. SPY did manage to close above it, but let me tell you, it's not a very convincing follow through. But I still gotta respect it as follow through because it still managed to close above that critical 412 level end of day. We'll see what happens on Monday when we get more context from the price action. But before I give you guys my trading plan, I do want to talk about my trading strategy and how I traded on Monday. Okay, so on my Discord, I write the second post of the day. I just give the group a range that I'm looking at, the levels I'm looking at, just telling them to wait for the setup. I wrote here 413.5 to 414 zone is first resistant and currently acting as strong supply. Bulls may need to base below it, absorbing the sell orders before it can break out, okay? And first support is at 412 to hold and needs to hold. But if it fails, 410 to 410.25 zone is in play. All right, so I give the setups and I give the target. All right, well, the first one I didn't give the target, but on the 15-minute chart, you see here, once we close and cleared the 413.5 level, I alerted to the group 413.5 to 414 zone cleared, putting 415 and then 416.5 to 417 zone in play. No puts unless 413.5 fails as zone fail as support to put back the test of 412. Okay, so pretty much what that means is that
no thinking, that comes later.
We just cleared a resistant level. You should be looking to long or buying calls. Play it level to level with my first target being 415, okay? And if 415 cleared, then that would put the higher price target in play. But the point is to play it from one level to the next.
If you got it, take it, man.
Aim small, miss small. Do it for bagels.
Level to level is crucial, especially in today's market. So once we cleared it, boom, we took profits at 415. And you guys see, this is not, in my opinion, this is what I like to call a hot stove rejection.
Kevin, I hear you collect amusing postcards.
Yeah, it all started when...
Touch the stove!
And it's not a regular rejection. It's a hot stove rejection where price did not spend that much time there, okay? Price hit it. Price hit the target in a very short amount of time, maybe a minute, 2 minutes the most or so. Price rejected. Boom. Look at that. Strong rejection. All right. This is why level to level is very critical to follow. Okay. We play it level to level. But once we broke down that 413.5 level, put the arrow on that one. That is right there. It's a false breakout setup. Okay. I always tell you guys, don't call tops. If you are a bear and the market is rallying and the trend is bullish, just don't call a top. Wait for a false breakout setup. And especially, when you're trading against the trend, false breakout setups are not going to guarantee that you're going to catch the reversal. However, usually when there is a reversal, it starts with a false breakout setup. So we want to put the probability in our favor, okay? Either way, for me, in my opinion, I like to just play it level to level, okay? So once we got that false breakout of 413.5, that's when I alerted to the group. Hot stove rejection for 415 level and 413.5 zone breaking down here. 412 is back in play as long as below 414. But bears need to break 412 to keep the momentum going. And they did. Once we broke down 413.5, we hit 412. That's where you should have took profit and maybe leave a runner with your stop loss above 413.5 or 414. And boom. This candle right here, that's when we broke down 412. Okay, the other ones were washes below. But if you played the false breakout setup, those washes below shouldn't have bothered you that much. But once we broke down 412, That's another indicator to enter puts. And look at that, another level to level move down to the 410 to 410.25 zone that I had before the market bounced and rallied the end of the day. By the skin of their teeth, the bulls closed above that 412 level. Okay? So even though it was overall a choppy day, there was still opportunities as long as you played it level to level. You know the setups, know the level, trade it unbiasedly. All right? So hopefully you guys can apply these tactics into your own trading, all right? You can apply it into swing trading as well, but it will have to be on a bigger time frame like the daily and the weekly chart, okay? So, yeah, as long as above 412, bulls have a chance at more upside, but I'm still watching this structure here, this rising channel, this pattern, okay? So based on this pattern, the support level is now at 409.2-ish. Okay, so based on this pattern, as long as above 409.2-ish, bulls are still in control. Okay, I know you guys don't like to hear that if you're a bear, but guys, I'm just, like I said, unbiased price action analysis. And like I said, we got this rising channel, and as long as above this trend line, it's better to assume that we could rise up more. Okay, because it's not a prediction. It's not a prediction. It's more like an educated guess or a calculated guess. You know, we take calculated risk here, right? So just it's strictly based on this rising channel, okay? Now, for me, in my opinion, we got a hostile rejection from 415. If SPY can break down 412 and 409.2, that would be very bearish, in my opinion. Okay, you can look to short at breakdown of 412. You can look the short breakdown of 410 or 409.2ish, up to you. But once this structure, this pattern is finally broken down, in my opinion, that is when the bears will take back control. Okay, and also this pink channel here. So once we break this rising channel, we can break down this horizontal channel, which is around 406. Support of that, break that down. That will be even more bearish. Okay, so that's the two structures or the two patterns that I'm watching. Bears need to break back below 412, break below 409, and break below 406 to finally break down these structures. And that would be, in my opinion, very bearish based on the charts. Okay, but if you're a bull, you want to see 412 and 409.2-ish hold at the lowest hold. Okay. As long as those levels hold, you have more upside. This is where it's important to know the resistant levels, right? So 413.5 and 415 are resistant. Okay, we see how critical 415 is now because it was strong rejection there on Friday. We had a strong rejection there back in February 14th as well. Okay, so if 415 clears, we could see 416.5 is to 417 zone. And then February high, back in February 6th was 418.3. Maybe we can retest there. We'll see if we can get some sellers step up there to give us a double top, setup. Not guaranteed it could happen, but we'll see if it's a possibility based on the behavior of the price action. So what I'd want to see if I was a bear is if it tests February 18.3, February high at 418.3. I like to see it reject there and then break down 417. That's why I would look to short. Okay, I would trust a rejection when it breaks down on support. But other than that, above 412 and above 409.2 lowest, bulls still have a shot here. They're still in control for now. And watch the resistance level if it can clear. Look to long when resistance clear. Okay, above 418.3, top of the rising channel is now all the way up at 422-ish. Okay, keep in mind 422-ish, we have a gap. There's a gap over there all the way back in August of last year, August 19th. We had a gap that has not been filled yet, okay, around 422. So that's definitely worth noting in my opinion, all right? So bottom line, guys, stay bullish above 412 or 409.2 lowest. Stay bullish. When we finally break down these patterns, this rising channel and this horizontal channel, which we need a breakdown of 409.2 on Monday and 406. That's the best time to change your bias or sentiment back to bearish, okay? that is my opinion. That is my recommendation for you guys. Up to you guys what you want to do with the information, all right? Triple Q has been chopping as well. All right, you guys see my green trend line. We've had a recently we had a false breakdown setup here. All right, so if Triple Q, if you're a bull, you want to see follow through, we need to finally break out this range all the way up at 321, clear 321, and it could trigger more upside, maybe the next leg up. RSI is not overbought anymore. Okay, now if we're gonna break down to the downside, it has to start with 315.3. As you see this green trend line, how it's been respected a lot previously, and also break down 313.2. Now we broke it down on Wednesday, but the market wanted to trick the bears and give us a false breakdown setup, which did trigger a very nice move to the upside. But with all these multiple tests recently and this false breakdown, in my opinion, there's a lot less buying orders there, which means the likelihood of an actual real breakdown without a recapture is the probability of it is a lot more higher, in my opinion. Okay, so break down 315.3 and 313.2. If it breaks down again, I believe it'll be a legit breakdown this time to put 311 and gap fill around 308ish in play. Okay, and like I said, to be bullish, it needs to clear 321, but there is support at 317.5 to 318 zone. Okay, if it could stay above 317.5, clear 319, maybe we can break out up 321. And Triple Q also has a gap fill from August 19th from last year. The gap fills around 329.2ish. So let's see if we can finally fill that gap. IWM. So yes, couple of trend lines I'm looking at. Well, first one I'm looking at is this green one. All right, and second one is the purple one. And we have a confluence, an area of confluence around 181 where they're intersecting, okay? So we did have a pivot low here back in late March. For me to trust this to be a higher low, I need to see IWM clear 181 to be bullish and trigger more upside, okay? Right now, it's basing around 176.5. There's a big battle there between the bulls and the bears right now, okay? If bears are going to win, they'll need to break down 174.3 to indicate to us that they won the battle and trigger more downside back to 172.5 and 170-ish with 167.5-ish below, okay? So yes, needs to stay above 176.5, clear 179 and 181 to be bullish, all right? But if it breaks down 174.3, look to short, that's bearish. Tesla, we got some chop here. This is a double inside daily candle, okay? So we got this big red candle. That's the grandmother candle. And then the second candle on April 13th is within the range of the red candle. So that's the mother candle. And then the child candle is because this candle's in the range of the mother candles, within the range, okay? So when we see double inside candle setups like this, is a sign of consolidation. Tesla's consolidating for a bigger move. Okay, so since we're chopping, it's on a daily chart, it looks a little weird. But if we go to a smaller time frame, it will look like a triangle pattern. Okay, but pretty much 186 is resistant, with 182 as support. Okay, 182 to 186 is the chop range for Tesla right now. Okay. Above 186, look to long with 190.3, and the 50 daily moving average at 192.6 is in play, okay? If 182 fails, 180, 178, and 176 are back in play, all right? Let's keep it simple. Now, Apple is basing, guys. It's basing around that yearly trend line that I got. It's not a good sign for bears because it could base a little longer. But just keep in mind, as it's consolidating under this resistant level, it's absorbing the sell orders. It's absorbing the sell orders, which could mean a sign of more upside. All right? I will trust more downside. We can break down some support, okay? 163.5, 162. But the critical one that I like you guys to pay attention to is this purple trend line. I mentioned in the previous video, this purple trend line you guys see here. Apple has been riding up this purple trend line all 2023. As long as as long as we're above this purple trend line, bulls are in control of Apple. All right, and we could see more upside. If you want to get short, wait for the breakdown. You can, day trade the breakdown of the 163, 162 levels. But if you want to swing trade, you want to swing puts, I like to see a breakdown of this purple trend line with some follow through, because one breakdown is not enough, right? We could get false breakdown setups on us. So yes, break down this trend line with some follow through, and then I would get bearish. But as of right now, very possible that bulls could base some more to build strength for more upside, okay? Now, DXY, while it's been looking bearish lately, we got a potential, keyword potential, double bottom here, okay? We bounced on this 100.8ish, 0.9ish level back in February, and we're doing it again for Thursday and Friday, okay? Potential double bottom, potential, but the market is clearly recognizing this level, guys. So I need to see a clear resistance for me to trust it. We do got a bullish engulfing candle here, but we need to see it clear some resistant levels, okay? Let me adjust this yellow trend line. All right, so I got first resistance at 101.9 and a recapture of this green trend line at 103.4. So if DXY can do that, that would be very bullish in my opinion. You can long the 101.9 recapture, and 102.4. If we clear that, that will put 103 and 103.4 back in play, okay? Now, for DXY to be bearish, it needs to cancel out this potential double bottom, which means it needs to break 100.8 to put 100.2 and 98.3 in play. All right, guys, VIX is looking bearish still. It broke down that channel that I've been telling you guys about. Breakdown of 18.5 would be bearish for the VIX, and it triggered a nice level to level move down to 17. All right, so we're at support here. So if VIX can bounce and recapture 18.5, that would be very, very bullish. All right, it will be a good false breakdown setup. Okay, but notice the lower Bollinger Band. It has space to the downside. So 17 fails, 15.7ish would be the next target for VIX. Okay, if it bases here, keep in mind, if it bases where it chopped, it tests that support, bounce, test at support, bounce. That's basing at support. It's absorbing the sell orders. That's usually a bearish sign. All right, I will trust bounces from support when it clears resistance. Starting with 18.5. All right, here's the dark pool, guys. I mentioned if we had 150 likes or more in the last video, I would do this again. We had 165 likes. All right, so I appreciate you guys, and I'm gonna share this more often now. Okay. So if we get 150 likes again, I will do this again for next week, all right? But from what I'm seeing, guys, we did not get the 1 billion premium that I like, okay? I said to you guys, I like to see a billion premium or more, because usually when we get 1 billion in premium, that's a lot of liquidity moving around, and on those days, the coincidence that I'm seeing is usually happen on trend days. So when I'm seeing big orders coming in, especially over 1 billion, that tells me, oh, we could have a big, decent move today. So I want to pay attention to the trend and trade with the trend, okay? Because we got liquidity coming in that's pushing the market either up or down. So we got to combine this with price action. So no, we didn't get the $1 billion order, and it reflected by this overall choppy day. But it was over 800 million, around the 413.39 level. Okay, so in my opinion, this is not worth paying attention to, but maybe you guys see it differently, so I just want to share with you guys anyways. But yes, there is activity around 413.3ish. I would have took it more serious, which that's a few cents off my 413.5 level, by the way. So, but yeah, if I was to take it more serious and it was over 1 billion, that's definitely a critical pivot level that I would be watching for. And the way I interpret it, above is bullish, below is bearish. Okay? For people that's new and seeing this for the first time, is it a buy? Is it a sell order, Uncle? We need to know. Guys, it's both. In order for the institution to buy, someone needs to sell to them. In order for them to sell, someone needs to buy for them. That's why we got to combine it with price action. And like I said, when the premium's over $1 billion, we usually get a strong move intraday, and it's usually a trend day, right? When we get these strong moves. So that tells me to follow the trend. So dark pool orders help me out a lot with my trading, and I hope it can help you guys as well, all right? So let me go to the option order flow. I'll go to the SPY, filter 500K premiums or above. So we got 61% into calls on Friday. Something that does stick out are these call orders. They came in around 1 o'clock. All right, 416 strike price, 16,000 in size, 8,000 size. This is from April 28th, so for the end of the month. Okay, those are pretty aggressive. And as far as puts go, nothing that really sticks out. Triple Q got a bunch of split orders with big sizes. That's not aggressive, and they're both puts. I wonder if they're hedges. I don't know. But yeah, 66% into puts, all right? But the big orders were split orders. IWM, 82% into puts. We got some block orders, but it's not those block orders that I like to see. Okay, those block orders that I like to see are those very in-the-money puts. This is some very in-the-money puts. But look, it's only 6.3 million, only 2.1 million. Size is small. So it's almost fit the criteria. But if there was a lot more premium and the size were much bigger, definitely would pay attention to those block orders, because that tells me that a potential big move is incoming, okay? But didn't really see it, but that's what we got. Apple, 100% in the puts. We got some sweep order here. This one that sticks out, 165 strike price though. So, yeah, it's in the money. Over 5,000 size for May 5th, okay? Tesla, 81% in the puts. Look at these block orders and split orders. Now, I kind of like this. I think for Apple, they could do better though, but I think it's worth paying attention to with these block orders. This 21.5 million, 400 strike price for puts, okay? 10.7, this is a split order, 79.5 million. That's what I like to see. 450 strike price from very in the money puts, okay? So yeah, usually seeing orders like that means a big move is coming. So definitely keep your eye out on Tesla this upcoming week, all right? And VIX, anyone traded the VIX? 73% into puts for VIX, okay? So yep, thank you guys so much for watching. I appreciate you guys so much for being here. If you guys want more content from Uncle Charles, please consider joining my Discord. I'd love to serve you guys at a higher level and make some money. Other than that, have a great Sunday and good luck this week. Peace.